Welcome to the Macro Report. This is Jay Fielder here, and we got a lot of news to go to. Here on Monday, we definitely have the S&P selling off. We're going to pull that chart up, as you can see it here on YouTube. See, let's get this out of the way. But we do have the Fed has a new indicator. All right, these are a couple things we want to get to. We're going to get to the macro news, macroeconomics. We're going to hit up what is the news, China relations, Bitcoin inflows, crypto, Fed comments. We got a lot of stuff to get to. It is Monday, so the market's going to react a little extreme. There's a lot to price in. There's a lot of stuff we got to go over, a lot of stuff to actually price in. And first, let's take a look at the charts before we jump into the macro news. Let's take a look at the charts and see what we're dealing with here. Okay, so we're here over here on YouTube. Here's what we got down the pipeline. All right. I got Tesla here on the left hand side. Now it does feel, if you're watching the markets, it does feel like, oh my goodness, everything's selling off. Look, S&P is climbing right back up from those pre-market lows. The question is, what took us lower? I think there's, China-U.S. relations are a little shaky, but Janet Yellen's over there in China, and a couple other officials too. The IWM index is actually moving up pretty sharply. IWM is moving up. Okay, so market bounce, in my view, I think we're getting a market bounce here. This just looks a little shaky. The Qs are the weakest right now, right? Dow's moving up. We got market breadth coming in. Dow's moving up. Advanced decline line moving up. IWM, small caps moving up. S&P 500 moving up. But big tech is selling off. It's just a rotation. That's what we're seeing. We are seeing a little bit of rotation. And yeah, so we're seeing a little bit of rotation, but nothing is totally off the table now. So we got the 5-minute chart here on the right-hand side, looking at S&P 500. I'm going to go to the 3-minute. We are testing that resistance from yesterday. Can we get above it? Who knows? We'll find out. Here I'm watching Tesla, right? Tesla had a sharp pullback. It looks like it's going to sell off today. That's a nice, if you flip that upside down, that's a strong bullish signal. So I think we're going to be bearish today. We'll probably pull back into 260 by end of day if the Qs cannot get back above the pre-market highs or the previous day close. So Tesla looks pretty weak. We'll see that VWAP pull in. I'm not trading it. I got a lot of news to go over, a lot of macroeconomic stuff to go over before we hit that. So, oh man, the SPY is breaking out. China's annual producer prices. Check this out. Okay, and we've been talking about this for a while. China will keep stimulating. China's going to keep stimulating because they have no inflation. Their producer prices just came out, -5%, right? So China's inflation is evaporating. They pretty much have no inflation, which means their central bank, to re-stimulate growth, will start pumping again. That flows into crypto. We're seeing a lot of crypto flows. We are seeing a lot of crypto flows happening. That's probably mostly US, by the way, but we are seeing that happening. So first, what did we just see coming out in the news really quick? Used car prices, right? So we got used car prices. Let's see if we could put this up here. All right. So quickly for the macro, let's check out these used car prices really quick. And this is just part of the data, but I want to jump into the data. Month over month, used car prices negative, right? Hey, let me know if there's any bit of fuzz in the audio, just to make sure the stream doesn't, is a quality stream. Please let me know. Don't be afraid to let me know if it's off. So used car prices here, right? Zooming in a little bit, we're negative for the third month in a row. That is that's a deflationary signal. There we go. Now we can zoom in. Deflationary signal. We're coming down, right? Inflation is non-existent. I think inflation drops further than a lot of people expect this week. Yeah, we have it this week. We have inflation this week coming on Wednesday. The market maybe sell off into inflation. I think it's going to be a healthy pullback. Year over year, car prices -10. Look at these used car prices year over year. There's negative, extremely negative. So there is really no inflation. It's going to come down fast, in my view. I think we do come down pretty quick. Just evaluating the whole entire macro. Now, looking at the dollar, we talked about this weekend, about the dollar, starting to sell off a little bit, even though yields are up. Okay. Dollar still falling. And this is the last signal for crypto, for definitely riskier assets. Once the dollar breaks down, that's a super risk on signal. Oh my God, no, it's not. What are you talking about? Okay, just wait till the dollar gets below 101. Okay, wait till the dollar starts really breaking down. That's going to set off everything. There's a reason why Janet Yellen is over in China right now. Other than that's just the Chinese relations and trade agreements and blah blah blah. And we're going to go over a couple of reports on that, or at least talk about what's going on with the U.S. China relations, why that's important for the market. Exactly, what we're looking at, chips, whatever it is. 10-year yields, we got to keep a look at this. 10-year yields broke out. We talked about that, about 10-year yields this weekend. Yields, the cost of capital are starting to move up. The dollar's diverging, so there's no really risk here. The dollar's actually falling. It's not risk off. It is risk on, although we get yields up, right? Because there's money leaving the treasury market. We're going to have to get yield curve control from the government, from the Fed. Somebody's going to have to buy those treasuries, or else we're going to have more interest rate risk, but the dollar's not moving up. So great. Oil, big risk. Here's the biggest risk. Oil. We said this weekend, can oil get above the 74, 75 level? It is testing that currently. We need oil lower to really sustain lower inflation, because we know shelter is lagging and shelter is going to come down. All right. VIX trying to make a move higher. Here on, oh yeah, we can see this is clear. VIX trying to make a move higher. Not really. It's still in a downtrend. VIX is lower. Volatility is down, right? NASDAQ volatility is down. Bond volatility, however, started to pick up a little bit, and that is going to signal some interest rate risk. Triple B spreads. And this is, we always look at triple B spreads, and come to find out, the Fed's actually looking at this. The Fed has a new indicator for financial conditions, and that includes triple B spread. So good thing we've been watching this, which is corporate debt. Is there investment in corporate debt? The less investment in corporate debt, the higher this goes. The reason why this is important, because if equities fail, then the debt holders are dumping the debt. They don't want to hold the debt because they don't believe in the actual equity market. So we want to see this continue to make new lows, and that is risk on. That's a risk on signal, okay? Moving over, S&P 500 on the macro chart. This is SPY though. It's not actually S&P 500. We are supporting that previous support. So looks like we're holding support here. S&P 500, whatever news we had, and used car prices down. Look, inflation is signaling to go lower. That is the biggest component to this whole macro story, right? This whole macro story is about inflation, and inflation is coming down regardless of what you might hear. What up, David? Who else we got in the chat over here on YouTube? We are here on YouTube. If you guys want to check it out, let me know if you're in the comments. We got David over here. Yeah, how's everything going? Yeah, so anyways, that's what's going on. QQQ still supporting. Don't trip out too bad. The Qs are still supporting, right? Bigger index. Now, I showed this weekend right here on YouTube. Look at the S&P, I'm sorry, the NASDAQ is holding the upper trend. We're still on this uptrend, and we're holding it, right? We need to break above 1525. Let's just call it 15.3. We need to get above 15.3, but we are holding the trend. As soon as we roll over and break that downtrend, we'll signal that. I'll say, hey, you know what? Looks like we're headed lower. But right now, we're holding that trend. The momentum is still higher. The RSI is pulling back. It is starting to cool down. And the more cooling we get in the RSI, the more momentum we break back up to the upside. This is not a bear market. There is nothing bearish about this. On the technicals, positioning is negative. A lot of people are going to get FOMO. They're going to come right back in if we continue to support these levels. There is no significant pullback, okay? Now, moving over to the overall crypto market really quick. We are holding, well, I mean, this isn't really a level. It's just, the amount of crypto being held. This is the overall crypto market. It looks kind of nasty. We're not totally in the uptrend. The uptrend is kind of failing here. Either way, we want to take a look at Bitcoin. Now, market breadth. Okay, we'll look at Bitcoin in a second. Market breadth is holding. Okay, this is the Dow Jones Industrial Average. Dow Jones holding the level. Once we drop, if you're looking at the DIA, this is the ETF for the Dow Jones. If we drop 336, 335, I'm going to be a little worried, because that means market breadth is starting to roll over. IWM, same thing. IWM is holding on, though. It's consolidating at a higher level, right? And that is positive news. This is still a bull market. This is still a bull market. We are moving up. Tech is selling off at the moment, but we will keep our eyes on that. Bitcoin holding inside the trend, uptrend. Man, we got all-time high hash rate today. I believe we do. Yeah, we're going to go over that. The all-time Bitcoin's hash rate is moving up. That is a good signal for Bitcoin. We see massive Bitcoin inflows coming into the market over the past couple of weeks. That continues. with this ETF narrative. Ethereum, a lot of people don't understand Ethereum, but I think Ethereum is going to outperform Bitcoin, although it is not the most decentralized, but it has the most utility to real world to real world conversions of the Web3 of tokenization. You need Ethereum for tokenization. To tokenize the world, you need Ethereum, right? So China, US relations, Bitcoin inflows, Fed comments. We are getting some Fed comments currently. That might be why we are actually selling off. So we're going to get into that also. Any questions, throw it in the comments. Now let's turn to, we don't want to see yields. Let's turn back to the trading chart, and then I'm going to set up some of the news or some of the stuff that we need to look at. Okay, no, that's not it. Okay, here we go. All right, so yeah, Tesla on the left hand side, right? Earnings in a couple weeks. Hey, best stock in the market, in my view, has the most upside for a mega cap. Could be, Amazon still has some upside too, but we've been watching Tesla. We got a lot of Tesla bulls in the chat, right? IWM is moving up at the side. Okay, Qs are starting to hold now. Qs are holding. Advanced decline is moving up. Dow's moving up. Hey, everything looks pretty strong here. I think Tesla's just having a quick little pullback. But hey, we do have earnings coming up in about 2 weeks, so definitely keep my eye on that. All right, now moving over to JP Morgan buys Tom Lee. Tom Lee did have a nice little, I want to hear what Tom Lee has to say. So we're going to watch a video later on Tom Lee. But before we get to that, definitely want to go through some of this news. SPY 435. Doesn't look like it. Looks like SPY is holding, David. Looks like SPY is going to hold a pre-market low 436.50. If we drop that, yeah, we're going to 435. But it looks like we're holding. Looks like we are starting to hold now on that 435 level. So I want to pull up. Fed rolled out new index gauge. Yeah, so I'm gonna pull this up really quick as you guys are listening or watching or whatever you're doing. And the Fed has a new measurement. And I'm gonna walk us through this. I'm gonna talk us through this because I think it's important that investors or whatever your decisions are, you know what the Fed is actually up to. What is the Fed up to? What are they trying to do here? Okay. So the Fed has rolled out a new index for gauging the economy that could have big implications. Okay. And I'm just going to get straight to it. Either way, keeping our eye on the charts on the right hand side, right? Or on YouTube, we're keeping our eye on these charts. And I just want you to listen into this. Okay. It will be called so the Fed is creating a new, they submitted it, I think, on the 30th of June, and it is a new way to measure financial conditions. The question is, what are they trying to do? I think they want to reflect lower financial conditions. I'm sorry, they want to reflect lower inflation, better financial conditions, because everything has just changed after the pandemic, right? A lot of data is revised, it's mixed, it's a little off because it's looking backwards year over year. The pandemic really messed with the data. And I think it's possible. Nobody really knows why the Fed is doing this. I think because they are doing a lot of talking. They want us to believe that they are accurate. And so now they're making a new index. This will be called the Financial Conditions Impulse of Growth, or the FCIG, and used to approximate the impact that moves in various factors for current conditions. Also, a year into the future. So they're looking into the future and looking at financial conditions in general. Okay, so part of this is going to be the Fed funds rate. Okay, we what do we say? We're in restrictive territory currently. We're at 5 and 5.25. The market is pricing in a hike of that Fed funds rate in the next meeting. But I think inflation expectations are going to make the difference here. Okay, now, so you guys can see this. I just want to make sure you know that this is what's happening. Here's what we're actually seeing here. Okay, financial condition. So I want you to take a look. This is it. This is the report right here. Oh no, this is Tom Lee. What are we doing? Oh, okay. Yeah, wrong report. Wrong report. Let's go to the other window. Oh, there it is. Okay. A lot of windows up here. All right, yeah, here it is. So again, Fed has rolled out a new index for gauging the economy that could have big implications. So we're just going to scroll down to get the meat of it, right? So here's what they're using, and we use this all the time, which is why I'm kind of highlighting this so you know, hey, we're on the right track. At least we know what the Fed is thinking, okay? They're using the Fed funds rate, the 10-year Treasury yield. We use that every single day. What is it? Where's the 10-year? Where's the benchmark rate for the cost of capital? 30-year mortgage rates. We don't really look at it, but I guess it is, something we could be looking at in the future. So at least we're tracking what the Fed's looking at also. The triple B spread corporate bond yield. Hey, do we talk? We just talked about the triple B spreads. They are actually easing at the moment. And this is the corporate bond yields or corporate debt. How healthy is the debt credit market, right? And that's really a credit indicator. Credit is good. There's nothing wrong with credit, despite what you might hear in other news sources. Okay, they're using the Dow Jones Industrial Average. I don't know why they're using this. It's heavily weighted by not actual market cap, but by price. So that doesn't make sense to me. Who knows? We'll see whenever they actually talk about it. Zillow home prices. We always talk about Zillow home prices, right? Redfin, Zillow home. Why are they doing this? Why do you think they're using Zillow? Because it's real-time data, right? It's almost like they're shifting away from what they have been using because everybody's saying, hey, including myself, complaining, your shelter prices are off, right? They're lagging by 6 to 12 months. So now they're looking at the Zillow home prices. Makes sense. And the US dollar, we use the US dollar every single day, right? As conditions. What are we easing? Are we risk on? Are we headed towards risk on or risk off? So just wanted to point that out. That we are definitely on the right track here as we learn about the market. We're all on this path together, right? We're all on this path together to learn how things actually work. They're changing all the time. Financial markets are complicated. They're very complicated, and things change all the time. So we got to keep our eye on that and make sure that we are definitely what up football legends. Let's see, let's put it up here really quick. Seems there's a downgrade in Apple by analysts. Don't know their name. Do you see anything on your side? I'll take a look at Apple really quick while Tesla gets to the bottom of that trend. Take a look. Downgrade on Apple. So it looks like, let's check this out before we move over. Oh, you know what? Because Apple, I think they slowed their funding for the headset, for that new headset that they came out with, or production, something like that. Don't quote me exactly, but there was something about them pulling back on their supply for that headset, which who knows if it's a good or bad thing. I don't know. But let's read into it. Blah, blah, blah. Stumble inflation, earnings focus. I don't see anything about a downgrade yet. Oh, here we go. Apple supplier, Foxconn. So one of their suppliers pulls out of a $19.5 billion Indian chip project. So possibly that's the news. I don't know. It looks like it's just one of their suppliers basically pulled out of a deal. Less supply, higher prices, right? Less market share because things are too expensive. So that could be it. I don't know if that's exactly the story. The iPhone 15 Pro Max may burn a bigger hole in your pocket because of this new camera feature. So maybe it's expense. I don't really know. We can look into it later on. But either way, we still got S&P climbing. Apple's starting to bounce here. And now we know the Fed. So anyways, getting back to it, the Fed obviously has, some new measurements. We're going to keep our eye on that. It is mortgage rates, right? Mortgage rates and we're using the Fed funds rate, but mortgage rates and what was the other one? Mortgage rates is what we don't usually track. And then Dow Jones. I'm not going to track the Dow Jones though. We'll look at the Dow. The Dow is okay. Maybe it just has to do with yields, stocks with more yields. I have no clue. I have to look deeper into it. But either way, mortgage rates is something we could add to the financial conditions that we go over, the macro we go over every single week. Okay, so for the most part, that's what they're doing now. Okay, now moving over to, let's see. US-China relations. Let's get into that really quick as the market sells off. Okay, look at the SPY. SPY is pretty strong here on the graph. On the chart. SPY is looking strong. Let's see. We got another comment. Caught big trade in Tesla below Friday's lows. Done for the day. You short Tesla? KP808. Maybe you short. Maybe you short Tesla, huh? Caught a big trade in Tesla below Friday's lows. Oh yeah, you probably did short it on the open. It does look like a big short right now, right? I'm a Tesla bull. I'm a big long-term Tesla bull, But hey, when the price action is short, the price action is short. The only issue right now for Tesla, I don't think it lasts, is that the S&P, right? The S&P is grinding higher and the Qs are grinding higher. So I don't think this is going to be much follow through unless we roll over later. But Tesla does look pretty strong. It is pulling into the pre-market lows as we speak. Here on the left-hand side, we'll see if that actually continues. Okay. Now I'm gonna pull up the next story to keep in mind. So, anyways, the Fed is, the Fed's using different types of they have their new economic conditions measurements. And hey, is it useful or not? I don't really know, but we're gonna keep our eye and just keep that in mind that we are looking at the same sort of stuff there on the macro. Okay. Uh US Treasury. Okay. So Janet Yellen, this is the next story. I'm going to keep the charts up here, right? I'm going to keep the charts. There goes Tesla, starting to move up now. So Janet Yellen. Now we know the Chinese yuan. We talked about this weekend in the macro report. The Chinese yuan is dumping hard. Why? Because they're debasing their currency. They've been printing a lot. The Chinese yuan has been printing a lot because their central bank is trying to re-stimulate growth. Okay, they're trying to re-stimulate growth, and that growth has not really materialized much. It did pump capital markets, and global liquidity turned up from October is when they started printing, but the manufacturing sector and their services is kind of slow, but manufacturing for sure is still negative, right? Now, the US sanctions for chips is the other part. We're not allowing them to produce certain types of chips, or we're giving them lackluster materials to produce chips because we don't want them to take over in the AI race. We're at war, but it's good that we're talking to them. Keep your enemies close, right? Either way, you just don't want geopolitical tensions to actually flare up. So Janet Yellen's over there, and I think this has to do with their currency too. Their currency is about to break against the dollar. So in general, when the dollar goes up, the dollar becomes more attractive to park your money, which is why money market funds are so attractive right now. And other currencies get smashed, right? And that's what we're seeing. So maybe there's some type of deal that could be stirring up over the next couple of weeks. We saw Christine Lagarde, we saw Kuroda. I think his name is Kuroda. We saw the Japanese central banker and the ECB, the European central banker. And who else was in there? Obviously, the Fed was there. Who am I missing? Maybe that was it. It was just them three. This was like a couple of weeks ago. And they really, I think what's really happening is you need the dollar to weaken from here. We need the dollar to weaken for global trade. Remember, the dollar equals the cost of trade. Okay. Yields, 10-year bond yields are the cost of capital, the cost of borrowing money. If that goes up, it tightens financial conditions, but the dollar is the cost of trade, right? When the cost of trade goes up, well, it's expensive for global trade to actually happen. It's like a haircut, right? Or an interest rate on literally just trading your goods and services. So for the global economy to pick up, the dollar has to weaken. And when the dollar weakens, asset prices go higher. Okay. So I'm expecting that. Either way, Janet Yellen, okay, here's the main points for that. I'm not even going to show it up here. We're just going to keep our eye on the market, S&P going higher. United States in certain circumstances, blah, 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 target actions to protect national security. All right, so Yellen's over there because she's basically trying to calm this whole capital or the sweeping export controls that keeps the big issue is that that we have sanctions, not sanctions, but we have restrictions on China from creating certain type of chips. So we don't have a whole lot of information yet. It's a bunch of blah, 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 blah. But the good thing is we are talking with China, and maybe there's going to be some type of deal. Okay, you guys can produce these type of chips if XYZ, if you purchase our goods, if you increase global trade, whatever it is. So we know China has to keep printing in order to get their economy going. That's just how it works. That is the macroeconomics. You got to keep printing. That's how the world works. Everybody always says, oh my God, inflation is coming. Inflation is so hot. The global economy, everybody's dude, we've been printing forever. That's how the fiat system works. Go do a deep dive into the Bitcoin standard. That is how the fiat, you've just never been taught that. They don't teach you that in economics. That is, well, some of you probably already know, but printing is how the global economy works. The issue is when the supply chains fall apart and there's less production, inflation starts to ramp up because there's not enough supply to meet that demand. Okay. And that's what we've seen lately. Either way, they're going to print. And I think we're doing a deal with China. All right. And a lot of it has to do with chips. And so that's why we're so bullish on tech, because we know the war is over better technology. We're trying to suppress them from producing better technology so that we can, take advantage. And that's literally why Nvidia, now AMD, Micron got a sanction from China, I think about like a month ago, or maybe it was 3 weeks ago. So it's all about technology, right? It's all about technology, and that's why I think those are the best investments. What in particular? Well, we could talk about that later. So that's what we got so far. Is the Fed is using new economic measures for their conditions, and and we're going to keep our eye on Janet Yellen and the Chinese. Look out for some good news. I don't think it goes bad with, Blinken's been meeting up with China too. So I think, just from thinking, these guys have to work together. We have with China, we share economic, how do I say this? We're going to share things that we need. Oh, how do I say this better? We need to do things with China, okay, for our economy to thrive, and also for them. So we're kind of tied together. We're friends economically, and we need that to work. So I think we're gonna get a deal, or we're gonna get some type of relief from that uncertainty. The market does not like uncertainty, by the way. Remember that the one thing the market doesn't like, not, oh my God, student loan repayment, we're going lower. The market already sees that. It's pricing it in. Another rate hike, the market's already pricing that in. Okay. It is uncertainty, is not knowing, is what gets the market the most. Just think about it yourself. If you know that you're gonna have to, if you know that you're gonna have to go get, you know, your wisdom tooth taken out, you can prepare for that. But if it's a surprise, your stress spikes because you have to spend money, possibly it's going to hurt. You didn't know. So the anticipation of not knowing whether you have that, have to go through something negative or not, is worse than knowing it and going through it. It is the anticipation that the market starts to sell off. Now, is that a good analogy? Probably not. But point being, it is uncertainty that we do not like. It is uncertainty that sells, or that really crushes the market expectations. What up, Slime Z? What's going on, Watermelon? How you guys doing this morning? Welcome to the chat. Let me shout you guys out real quick. Got to get this together. See, we still got it out here. Yeah, what up to the chat? How you guys doing? Oh no, I didn't mean to put that on loop. Sorry, I'm still learning how to work this thing. I don't have my Stream Deck yet. I'm still waiting for the technical people to get back to me and tell me why it doesn't work on the Mac. Right? Nothing works on Mac. Apple's like a walled garden. They don't allow certain applications to work functionally 100% because they want you to buy their Apple. Well, come out with the Stream Deck then, Apple. Anyways, okay, back to the markets. What up, Broken Testicle? Good morning. Lost another trade this morning. I'm out. Hey, man, trading is tough. I'm still saying it catches 300. Trading is tough. Don't get me wrong. Trading is tough. I'm just keeping my hands off of trading right now until, once inflation comes through, I think it'll get a little clearer. But right now we're in a big consolidation zone. So looking at the S&P, right, on this channel, on the right-hand side of my charts, I'm going to go to the 4-hour chart. We're consolidating. The S&P is consolidating. I think we're consolidating for a big breakout once we get the inflation news. Okay. Other people are very bearish. But from my view here, I think we are going to break higher, but we're still in this uptrend. I know this is a 4-hour chart. We're still in this uptrend. So we got to knock out that 4,400 level, or 444 in general. Now I'm going back to look at the market as we're talking here. It is 1 hour into the trading session. Qs are finding resistance at the pre-market highs. IWM found IWM though, small caps are moving. Small caps are moving. Boy, do we got a bid in small caps. That is strong market breadth. Yeah, we're still consolidating, and people complain there's not enough market breadth. Only a couple stocks, bro. Get over it. Duh. Why do you think big tech is moving? Why is it that top 25 stocks are moving? Because they can still produce earnings in a recession. They can still produce earnings while inflation is elevated and it's coming down. And so, of course they're going to lead, because we still have issues. The issues are not resolved completely. So the stocks or the companies that can actually still thrive, that keep their margins high, they're going to move up. That only makes sense. We won't get real small caps or real market breadth to really start expand until those yields come down. We need bond yields. The cost of capital needs to come down, because these companies do not run off of, they're not earning. A lot of the IWM, a lot of these small cap companies are not turning a profit yet, right? Their prospects are into the future. Their revenue expectations are into the future, so they're not going to make money. So as the future cost of capital goes up, 10-year bond yields, right? 10-year future cost, then it's going to really suppress them. But they're still moving up with elevated bond yields. So I'm still, it still looks like there's a lot of optimism in the market. Regardless of that, a lot of people are in cash. A lot of people are in cash and they're waiting for a big crash, right? In cash, waiting for a crash, not going to happen. In my view, it's not going to happen. We're not going to, 3% crash. Great. That's not a crash, right? If you're looking for a real crash, right? Those people who are in cash waiting for a crash, you're looking for the S&P, because the S&P really could come back to 4,200, right? We could see a 3.5% pullback from here. And we'd still be in a bull market. We'd still be in this bull trend because we're above the big iron condor or the big iron level, which is 4,200. That was the big level. 43, we need to hold, but 42 is the last level before, something bad is actually happening here. Now, if you want to talk about a bear market, we need to get below 3,800. So you need to drop over 10%. Wow, we need a black swan for that. It's not happening. Sorry, bears. Sorry.
Nope.
Not happening. All right. So we'll keep our eye on that. Anyways, is this Tom Lee? Okay, yeah. I wanted to listen to what Tom Lee had to say. I think this was today. Was this today? Yes, this was today. He came on very early this morning and he spoke a little bit about his view and what he's starting to see develop in the market. Okay, S&P is pulling back. Still, it looks kind of bearish now. It looks like we're going neutral. Advanced decline just ran out of juice. Be careful if you're long. Find support. Look for the support. Let's see if we're holding VWAP. Dow Jones is pulling back pretty strong. IWM is pulling back, still in the bull trend. Qs are weak, so it looks like we're going to be moving sideways here. And before we do move on, though, I do want to look at some of what the Fed speak was. Let's see what the Fed speak was, because I know as time goes by, we want to hear, or we want to know what exactly the Fed is saying. Let me move this over here. So what is some of the Fed speak? What's going on? Canadian. I don't care about Canada right now. Fed Bar speaks. Yeah, so we got Fed Bar. Who was it? There was a couple speakers. We got Fed Bar. Not that you guys really care because you just want to know what they're saying. But it is Fed Bar. Okay. Fed Bar, Fed Daily, and Fed Meister. I really like Daily and Meister. I've been tracking them for a while. Two very smart ladies. I mean, they're on the Fed. Meister has been pretty hawkish, but I actually think she's very consistent. Daily is dovish. Okay. Daily's been pretty, she goes back and forth. Meister and Daily. The thing is, I tracked a lot of them in the past, listening to their speeches, like literally breaking it down, like 20-minute speeches, what they're trying to say here. And they all focus on core inflation, right? They're focusing on core inflation. They don't admit there's progress being made, but yet they're still kind of dovish, and then they're still kind of hawkish. So it's a lot of mixed signals. And what I think it is I think they're trying to keep expectations higher, because what's happening is we're seeing consumers save more money, and that's what they need. Consumers to stop spending so that supply side can ease. That's what they need, the supply side to ease. And so they're going to keep those. That's my final analysis here, is that the reason the Fed stays hawkish is so that information trickles down to the economy, to consumers, and keeps them from spending so much, right? And saving more, because that's going to help the economy from really overheating again. 3% as a correction, not a crash. Yeah, that's not a crash, Hassan. That's definitely not a crash. All right, what else we got here? Good. Okay, got no comments. All right, cool. So going back to it, let's hear what these dudes, and then we'll get to Tom Lee. I know I'm like all over the place, but I want to know, let me know if I could fix the stream if you want to see something else. I just want to, this is how I think. I'm like, okay, what's next? What do you got going in? Okay. And then I'll organize it a little later. We'll come back tomorrow and say, okay, this is what we got. But for the most part, there's a lot of info. There is no perfect way to really look at the market. We just want to get feedback and say, hey, are we tracking the right indicators, right? Are we tracking the right indicators? What's important? What's not important? Some things don't even matter, and people, really focus on them. They really don't matter. Anyways, I wanted to hear what they're saying. Where is it? I thought this guy was showing. Okay, Fed Bar extending enhanced capital standards to banks with 100 billion in assets, down from 70 billion. New rules will mean biggest banks need extra $2 of capital for every 100 of risk. Okay, Fed Bar, higher capital requirements coming for big banks. So Fed Bar is basically saying higher capital requirements for the bigger banks. What does that really mean? What is he trying to say there? Higher capital requirement. Maybe that just means they pump the coffers. Here goes more capital. It sounds like a restriction of credit and to some degree, or just keeping things, steady. Who knows? We really don't know. Either way, they're focused on the big banks, right? All this banking regional risks, I don't think it really matters. Oh shoot, let me remove this banner. I got to get used to this. We're talking about the Fed comments here. All right. So I don't really think this really matters that much. The whole, oh my God, commercial real estate, that's already priced in. It's already, we need a surprise for really things to roll over. We need a surprise. And really that surprise comes from geopolitical sanctions or something, some kind of geopolitical unrest. That's the only thing I could see down the pipeline, really surprising the market at this point. Pretty bullish. All right. So what else we got? Fed bar. I guess that's all. That's all we really have from the Fed. I know there's another speaker coming up, so we'll keep track of that. We'll see if there's actually some. Why is SPY dropping but VXX not pushing higher? What happens when it gets like that? Good question. Good question. I think what it means is the S&P is starting to separate. I don't want to say separate from the VIX, but it hasn't been a 1-for-1 lately. And I got to think about that for a second. My mind is everywhere. I got to think about that. So we got the VIX down here. The VIX is S&P dropping, VIX dropping. Yeah, we've had the S&P and the VIX kind of moving together at some times, and that's usually they're moving inversely, but they've been moving together. So what I think is happening is actually the VIX did push higher there. I'm looking at it on my charts. It looks like the VIX did move up. So I don't know, David. I don't know, David. I did see that in the past, though. I did see that in the past. Maybe the VIX is a little weaker. In my view, what I think that signals is that the VIX, like people are just not buying the VIX. A lot of the risks are coming off the table. Volatility continues to drop. Maybe some people's contracts are just up end of the month, last month, and I don't know. I really don't know. I can't tell you I know the answer to that. I just see the signal, and something is changing. Something is starting to change. Also, the dollar is decorrelating with the 10-year treasury yield. So there's something changing in the market. I don't know what it is. Hey, maybe some guys that are super smart, they know exactly what's happening. I just know something's changing, and I'm keeping my eye on, some of the news coming out, the macro. What is it that's happening in the market? Why is the dollar de-risking from the US Treasury yield? It almost means the US Treasury yield doesn't matter. I think what it is, the economy is stronger than expected. And so that means that, the real risk is growth collapsing. We're not getting that. So the dollar is really like, okay, we don't care about higher rates because the economy is coming back. And it's really going to come down to inflation, like I said 1,000 times. All right, done with that. Done with that. Let's go over to let's actually check out that video. Yeah, I want to hear what Tom Lee has to say. I think it'll play on here. There we go. Yeah, it will play on here. Okay, good. So we're going to listen to what Tom Lee has to say as the market is still doing its thing. Okay, trying to recover. It's trying to recover. Tesla's trying to recover. AMD is trying to recover. All right, AMD's trying to recover. I got out of my AMD calls after I saw that price action last week. I didn't like that drop below VWAP. Look at this. Look at this drop. Like it was bullish all day and then it dropped. I got out. Okay, I got out. I want a good opportunity. That was not the best opportunity. I dropped out of it. Made a new low this morning. Still pretty bearish for AMD, unfortunately. Okay, and I just don't want to be a part of that. I want to see the S&P really start to find some support, and that'll be the signal for AMD. But it's still capitulating. It's still, it's still trending higher. It's just AMD's tricky. It's very tricky. When it moves, it moves. And maybe there is this, you can draw another channel here. This is actually a pretty clear channel. Let me go to that 30-minute. This is a pretty clear channel for AMD. For those of you looking at AMD, if you are. We'll see. And maybe that whole Chinese news about the chips is still affecting it. It could still be affecting it. It doesn't have a solid macro backdrop where Tesla does. Tesla's in Europe, Tesla's in China, right? Tesla has the best macro setup in my view for the potential. And I'm still very bullish on Tesla. I'd rather hold Tesla calls or shares than hold anything else in this environment. We're gonna get those earnings out coming next week. All right. Let's see. Palantir dropped a little bit this morning. Anyways, we'll get to the Fed comments, but first, let's go back to Tom Lee's macro report. And then we're going to hit crypto a little later. We'll hit up crypto a little later. We'll take a look at crypto. But for now, let's check this out. Let's figure out what we're seeing or what Tom Lee has to say. Change his view up a little bit. Here we go. All right. See, can I zoom in? Or can I change? Oh, I can make it wider. Cool. All right, yeah, let me make it wider. See if I could fit the screen. There we go. Okay, perfect.
A new call for a gain of 100 points or more in the S&P in the next week. This all has to do with expectations of a lighter than expected CPI reading. Tom Lee is co-founder of Fundstrat Global Advisors and a CNBC contributor. You started the year more bullish than anyone. I saw the articles last week that I was referencing that you were the one bull that was talking about 4,700 on the S&P. So this isn't, you're not late to the party like so many of these people that I love analysts that, you know, they have a Netflix, they have a neutral on Netflix and a price target of 170, and then they raise their price target to 400.
See that too. What he's calling out there is all. Remember we talked about this. I said, hey, you're gonna start seeing a lot of bears start raising their price target. Okay, we're going to 3,500, next 3,800, next 4,000. They keep raising their targets because it hurts mentally, right? The pain trade is higher.
Like, you know, like no one's going to remember. So you were there early. This is not something you typically do, though. A 1 week call, short term, for a 3%, 2.5%, 3% move in the averages.
Yes, that's right. You know, markets move a lot around the CPI report, so that's always a big market event. And we thought a tactical sort of opportunity was emerging because last week the market sold off because the jobs reports are strong, yields really popped. So investors are kind of fed higher for longer, a little bearish into this week. And I think core CPI could come in at 0.2 or better. So it could be a huge downside surprise.
0.2 or lower, you mean? When you say better, you mean?
Yes, 0.2 or lower than 0.2.
Yeah.
And
that is way out of where it's been, and people aren't expecting that.
Correct. It'd be the lowest since August of 2021. So it's a huge break of pattern, almost a 2-year low. And it would show that the Fed is getting inflation to levels like on a monthly basis that they're trying to target. I mean, a 0.2 is 2.5% annualized, and it might even be repeatable. You might see similar numbers for the next couple of months, and that would, I think, push short-term rates down and trigger a pretty major rally.
And you also, it has to do with used car prices, which in the last 2 months have been, everybody talked about an outlier, but you also had a statistic about how many of the components are actually in a deflationary trend. And it's like 55% versus historically, that's very rare to have that many of the components in a deflationary.
Correct, yes.
What are those numbers that you?
So yes, on a weighted basis, 42% of the CPI basket is in deflation right now, meaning the price was higher sometime in the past 18 months. Wow. And the long-term average is 30%. The 10-year average is 38%. So this is already far higher than what you'd expect. So future inflation should fall, and that's with shelter still rising at 8%. So when shelter starts to flatten out, that's going to take that number to 70% or more.
Hey, Tom, overnight, China.
So used car prices were a big part of the CPI staying sticky. Those are rolling over, right? They're due to roll over. They spiked a little bit. They're definitely rolling over. And now shelter, I think, is starting to roll over, which is why the Fed is switching to the Zillow data to get more real-time data to show that inflation is actually coming down. Because I think at the end of the day, the tough spot they're in is, can we start printing? Can we start monetizing the debt? Can we get because the U.S. Treasury, I'm sorry, but the U.S. Treasury, the federal government, and the Fed are pretty much the same thing, right? They're pretty much the same thing. They blah, blah, it's all optics. They need to re-stimulate growth again, whether it's through fiscal policy, which we've been seeing. And they know that. I think the reason why rates can stay higher for longer isn't because inflation is so threatening. It's because you know, the White House keeps spending money, trillions and trillions of stimulus. And I think there's more to come. So the Fed's like, okay, they're going to keep spending. We got to keep rates higher because the economy is not going to collapse. The labor market's strong. They keep spending. We got to keep the expectations up so things don't get out of control, right? And that's exactly what's been going on here. So anyways, shelter rolls over. I think we see a big collapse in inflation. I have a feeling that it's going to be much lower. When we'll look at the expectations in a second.
China had some deflationary numbers for producer prices. Consumer prices were weaker than anticipated. And it had people wondering if there was real concerns about the economy. There's a downturn there. So how quickly does good news from a weaker CPI become bad news?
It could, based on the market mood. Sometimes the market narrative can flip. But the weak PPI in China, it is kind of adding to a disappointing reopening story for them. But the good news is, China PPI and US PPI are kind of correlated. So I think it does mean it's going to feed over into the US as lower prices, either better profit margins for the S&P or lower CPI.
You also raised your year-end target for the S&P recently, right?
Yes, yeah, we did that.
And see, that's also a big boost to the market, which is PPI producer prices. CPI is consumer prices, right? So and really, what do we care about? We really care more if you're in the stock market, not the economy. Okay. If you're in the economy, hey, whatever, that's not what the goal here. The goal is, how do we figure out the market's going higher? How do we analyze the market here? So producer prices are literally the cost of producing, or the cost to run your business. So if the cost of running your business is much lower, and we're seeing negative 5% in China, we're at 1%, I believe, here in the US. We're at 1 or 1.5. I don't remember, but it's low. It is collapsing, right? PPI is collapsing. That means margins are going to improve. So if those people say, oh, growth is going to collapse in the second half of the year, earnings are going to be lower. Well, PPI is literally increasing margins. The lower it falls, the better the earnings picture looks. So the outlook is actually looking good. Producer prices will come down.
At, a few weeks ago,
The 48 and
25, yeah.
48, 25. Earnings season is coming. Everyone's saying that consensus, Wall Street Journal, other places, can be a rude awakening for people when they see earnings. And also the recent backup in yields. Rude. This is a hated market. This is not what you're saying flies in the face of consensus again.
That's right. I think there's a lot of entrenched skepticism. I think some of that will get shattered on Wednesday with CPI. But on earnings, the reason earnings aren't doing better is because of energy. Energy is now going from adding to earnings this quarter to actually a 25% drag. Excluding energy, S&P earnings are up year over year. So it's the first positive year over year ex energy since first quarter 2022.
You remember the days when Bitcoin had fallen to about 2,000 and you were talking about 20,000. And I said, why would disrespected analysts be dabbling in putting his reputation on? So it did not only went to 20,000, it went to 65,000.
Bitcoin. Okay.
More recently, you've said 200,000 by when? The end of 2025 for Bitcoin?
Yeah, it's possible.
Now you're making short-term 1 week calls on the S&P to go up 100 points. Normally, I would say he's lost it. And do you remember Joe Granville? It was one of the greatest technical analysts of all time. He finally ended up dressing up in a pharaoh outfit and predicting earthquakes. And I thought he had lost it. With you, I don't think you've lost it. I think you're like this savant or something. That I don't doubt anything you say at this. But 200,000 on Bitcoin's a little.
It's aggressive.
It's aggressive. But by the end of when?
Sometime in the next 5 years.
You know that a week from now, we're going to know whether the S&P is up 100 points or not.
That's
why
right.
make that call? Why try? Why even do that? Why?
I felt some urgency for our clients because I believe last week was a moment where people saw interest rates really pop on the jobs report.
Look, the reason why Tom Lee is so bullish is because he believes that inflation report is going to come out very weaker than expected. I just looked it up. Okay. The market is expecting 3.1, and keep in mind, we're at 4% inflation right now, CPI headline. There's a bunch of inflation indicators. We're looking at headline. Headline is at 4. And people say, why look at headline? Well, because it includes energy in food, right? Am I wrong here? CPI is energy and food. So when people focus on core, well, guess what? For consumers, the bigger thing is energy and food, right? Your gas prices, your energy prices, your electric bill, your food. That's what really crushes you at the end of the day. So we're looking at headline CPI for a reason. And headline is at 4%, and it's due to drop to 3.1. The expectation for the analysts, anyway, are 3.1 to 3.2. Okay. So if we get to 3 flat or 2.9, man, S&P's up 100 points, like Tom Lee says. Easily we break out. I think we break out of this consolidation. And that's what it sounds like he's expecting. He's, he doesn't really make those short-term calls, but I think he's seen the, and if you look at Trueflation, right? If you like Trueflation, which tracks like 10,000 different inflation indicators, prices, it's at like 2.5. So I think we're due to hit the 2 percentile, or at least 2%, possibly this week. That'll be a shock. That will be an upside shock. I'm not saying it does happen. I'm not saying go all in, go buy Tesla calls and Bitcoin, but if that is the case, there's going to be a big upside shock, and we go to wave 2 FOMO, right? Been talking about this for a while. Wave 2 FOMO, if we get that. Mike Italiano, I'm not worried about inflation. I'm worried about job numbers and the Fed's reaction to it. Okay, Mike, fair enough. I don't really think the Fed cares about the job numbers unless wage inflation is going higher. If it's wage inflation, right? If average hourly earnings are turning up, if wage growth is turning up, if prices paid from the manufacturing and services sector turn up, that's a problem. But if more workers are coming in, if jobs are strong, you produce more, you have more supply, and that actually levels out inflation on its own. So the real issue is if you have less workers, like ask any factory worker, if there's less people working, they actually have to hike their prices. And why is that? Because they cannot. It's like having a lemonade stand. You have a lemonade stand, and you're making $100 a month, right? That's slow for easy numbers. You're making $100 a month, and then you have less supply. Well, while you're selling each of those lemonades for $10, and excuse me, you're selling those lemonades for $10 a piece. If you have less supply, that means you're going to make less money, right? You don't have as much lemonade. You don't have as much cups to sell. So you increase your prices. Now, that's just a really easy way to look at it. It's not that simple. Oh, excuse me. It's not that simple, but that's kind of the way that's, trying to simplify the concept. Now, if you have more workers, more supply, more lemonade, more cups, now you can actually lower your prices. So you attract more people, more demand, you lower your prices, but you're still making the same, if not more, because you have more demand. Therefore, the more workers that come into the economy, the stronger the labor market. The stronger the labor market is, that actually helps inflation. That doesn't make inflation go higher. And at the same time, you got the Fed spinning the recession territory, or we're looking at the savings rate, looking at the consumer. And even though the payrolls are still positive, the savings rate's going up. Spending is starting to trickle lower, and incomes are staying level. So yeah, I hear you on that. Maybe I'm wrong, but that's what I think. I think it all depends. I think that the real labor market issue is whether wages go up, not necessarily are jobs strong. I think it's about wages. You can only hike prices to a certain degree, though, which is why most are downsizing. Okay, fair enough. It is turning up. It is turning up. Mike, let me know what you're talking about. What are you saying turning up? You're saying wages and average hourly earnings are turning up? Confirm that for me, Mike, and then I'll show you the data I got.
And the whole narrative did change. I hate to interrupt you, but the whole narrative did change.
Yes.
Higher for longer. Everybody. I mean, it's like you walk out on the street and someone who's like picking up a cigarette butt looked to me and said, "Higher for longer, Joe. Higher for longer." So everybody.
That's right. So this could be the first piece of really good news that the Fed can point to say, that's why we're slowing the pace. That gets priced out of the markets and equities can rally. So it is a risky call, but I think that this is
why do it? What's the upside? You're already, getting all these accolades for being the only bullish person on the street, one of the only bullish ones.
That's true. I think we just wanted for our clients, we just wanted them to contain their unease about what the markets are doing, because it did wobble really since the end of the second quarter. Stocks have been a little choppy. So I think this is the moment they can sort of inflect.
Well, it's great to have Tom back a lot.
We've missed you.
Yeah,
it had to do with Bitcoin. I think someone didn't, thought there was a real stigma to that.
All right, now that was okay. That wasn't the most insightful. This is we pretty much covered all this. So what Tom Lee is saying, I think we're pretty much, there's nothing new there, right? We kind of know that. Now, Mike says that wages have been going up this quarter. We've seen wage increases actually overcome cost inflation increases. So, Mike, any month over month data that you're speaking of possibly could, look like it's moving up. But if you look at the trend, right, and I'm going to pull up the trend right here. I'm on YouTube, by the way, with the charts. I'm going to pull up the charts on YouTube because Mike is saying wage growth is starting to turn back up. And hey, maybe he's right. I disagree, but this is the chart. We can all interpret the charts a little different, right? So let's get to that. Fair enough. That's good though. That's good. I definitely want to hear pushback somewhere, right? All right. So this is wage growth in the US. Okay. Since March, wages have climbed since March. Yes, March, April, May, wages have been climbing up. But overall, if you look at the trend, we're still down from January and we're still down from November. If we get above January, maybe we're a little worried, right? If we look at the 5-year trend, so this is the 5-year trend, and we're looking at the 5-year chart, you can see from 2021, from the peak in 2021, we've only grinded lower with a couple of hiccups to the upside. You get a hiccup to the upside, drops, hiccup to the upside, drops, hiccup to the upside, drops. So now hiccup to the upside and then drops, right? That's my expectation. So I'll be wrong if we get above 6% and start climbing, but it's just a hiccup. It's a short-term hiccup, Mike, when you look at wage inflation. Also, if we sort of measure the actual historical trend, you can see that we're literally at pre-pandemic highs, right? So we're actually at the norm, which is a little above 5%. You go all the way back to 2000, so 20 years. Look, from 2000 to 2005, we were above 5%. We're in the 6s, 7s, 8s, whatever, 2010. So either way, guys, look at this trend. Look at this trend. I don't have I need an actual sideways, but if you look at this bar, we're pretty much at, we're decelerated, right? So wage growth, Mike, is right back to where it was historically. So, I mean, hey, we really got to start turning up for that to be negative, which means it's not just a blip that goes up over a couple months. The trend breaks and it goes higher. So I don't see that trend breaking. I definitely don't see that trend breaking. And we go to average hourly earnings too. That is the other indication, which is, let's see, business average hourly earnings. What is that? No, that's labor market. Yeah, let's go to labor market. So we'll go to average hourly earnings year over year. Right? Those are flat. Those are flat. They stopped decelerating since April, but those are still flat. So the trend here is also still falling. It might be slowing into 4%, right? It might be slowing a little bit. So let's look at the max. This is still a little elevated though versus historical standards. So average hourly earnings still elevated. I will concede to that. I will definitely concede to that, but you can't say it's moving up. I don't think you can say it's moving up when the trend is still lower. Okay, the trend is still lower. So we'd have to break the trend. We'd have to start moving up. Either way, those two indications tell me we're still moving higher. We're still moving lower on wage growth. Maybe that changes, but from now, the way I look at those charts, definitely not moving higher. Just a little stickier over the past 3 months. I don't think it's a hiccup. I think it's necessary. Wages are severely lacking other costs. Well, I'm saying I think it's just a hiccup. I'm not saying it shouldn't go higher. I actually think wages sticky around this area sideways is a good thing, right? I think it's a good thing. I don't think it's bad either, but I'm just saying I don't think they're moving up, Mike. And yeah, I agree that it is necessary for wages to actually stay at this level. And wage growth though is different than wages. Wages could stick here, but we don't need wage growth necessarily to outpace anything, right? Maybe I'm wrong, but we don't really need wage growth to outpace anything. I think more than anything, we just need inflation to come down, because if wages stay sticky where they're at and inflation decelerates, well, your wages are better against your prices, right? So either way, you get a good increase there. Let's see, it's moving up versus costs. Oh yeah, the wages are because costs are falling faster than wages, so that's positive. It's maintaining the similar increases versus lower inflation costs. Yeah, so yeah, that's good. Now my whole thing, like I said before, we're just not moving up. Wages are not spiking, right? They're not breaking the trend to the upside. Wage growth, average hourly earnings, they're not. It's not happening. As a matter of fact, prices paid from the manufacturing and services sector are also decelerating, right? I think. Do I have that? Do I have those charts up? We'll show them later, but anyways, those are decelerating. So in general, you're not getting wage inflation pick up. It may be a little sticky, which isn't terrible, but it's not picking up and it's right back to historical standards. And as long as inflation comes down, we're totally fine, right? We're totally fine as long as inflation comes down. So that's what I'd say. Your thoughts on Bud Light? Let's see. I'll have to look at the actual Bud Light trend. If you want to see it, I'm on YouTube, by the way. All right, so you guys on YouTube, I'm going to switch over to macro chart. We got a request. If you want me to do some TA, let me know. I'll do some TA on I'll definitely do some TA. There we go. But before, whoa, why did that switch over? What the heck just happened here? All right, there we go. I'll do some TM, but like give me just take a little quick break, little quick commercial break. Use little girl's room.
Stupid.
All right, we're back. And yeah, we'll look at Bud. All right, yeah, we'll look at Bud really quick. Shout out to the chat. Appreciate you guys showing up. Always a pleasure. We love it. Okay. Really quick before we get into this Bud. Yo, why does this chart look dumb? Oh, okay. I need to push this out. There we go. There we go. Let's get that on there. Bud, let me let these guys know really quick on TikTok that we're on YouTube. I need to send a comment. How do I send a comment? There we go. Charts on YouTube. And I'm going to pin this. What the heck? Oh, there we go. Pin this comment. Hopefully that worked. All right, there we go. Charts on YouTube. Bud. So yeah, let's check out Bud really quick. And I'm keeping my eye over here on these charts. Looks like AMD starting to recover off 109 previous gap. Tesla. Also, Mike, did you hold your AMD or did you get out? I remember you were in AMD. I got out last week. It pulled up and it just couldn't keep going. Tesla maybe getting rejected by VWAP pretty hard there. But the overall market may be strong. So Bud, thoughts on Bud? And yeah, give me your, if you guys want me to do some TA, some technical analysis, I will. Bud, I'll keep it real with you. If you're short Bud, no, I'm just kidding. I don't know if you should be short or long Bud. I really don't know. But for the most part, I am not a fan of this. Let's see. It's just a weird chart. Why Bud, right? Why Bud? It looks weak. It just dropped the previous support. It looks very weak. So it right? This was a previous support on a gap up that it had, just got rejected. It looks like it's coming lower. Bud looks like it's coming back to 53. If you can't hold 53, maybe back to 44, somewhere around there, 45. So Bud looks weak until it breaks that uptrend. Let me see what the moving averages look like also. It's getting rejected by, hey, Bud looks weak. But if I had to make a guess, I would say Bud Light is getting rejected by the trend, making lower lows, lower highs, getting rejected by the SMAs, simple moving averages. And I'd say it's going back to 52, 50, 48. That's my view really quick to look at Bud. See what equal weight. Hey, equal weight though. Here comes equal weight pushing higher on the S&P 500. Equal weight looking good. Okay, AMD starting to pull up now. Keep my eye on that. Oh man, I'm on the wrong side. All right. Let's get back to it. Bad news already baked in. Strictly a quick play for me. Let's see. I wouldn't be an early investor. Okay, you're long, Bud. That's totally fine. That's just my view on Bud. That's what I'm seeing on the charts technically. I don't know what their fundamentals look like, so who knows? But technically, it looks pretty trashy. All right, IWM is starting to step up a little bit. Let's get into. See, is there anything that we're missing here? Extreme greed in the market. Crypto fear and greed. Neutral wholesale inventories. All right. I think we're going to jump over to the crypto news. To some crypto news, which is the hash rate of Bitcoin. All right, so I'm going to throw Bitcoin up here. Bitcoin's still holding that 32,000 level. I'm sorry, 30,000 level, right? Looking pretty good. Now, this is the overall trend of Bitcoin, right? Super, like we're at the bottom of the cycle here. Look at this Bitcoin cycle, right? You basically have, this is monthly. These are 3-month candles, by the way. So these are quarterly candles. 2 quarters down, we blow up. A year down, we blow up. A year down, we blow up. So we're starting to move up now. We are starting to move up on the Bitcoin price. And I think we've bottomed, or pretty much bottomed at the previous high, a little even below that. And Bitcoin looks solid. Let's get a little more detail. Let's go to the monthly, the 1-month chart. So I think, it's about time for Bitcoin to start exploding. So the hash rate, just so you guys know, that article, where's the hash rate article? This is the hash rate article. And basically it is Bitcoin's hash rate reaches all-time high. Now, this should happen all the time. It doesn't mean go buy Bitcoin, but just to, restore confidence here. In the world of proof of work, if you're not familiar with proof of work, showing that you've done the work, hash rate is a critical metric that reveals the health and security of a network. An increase in hash rate makes the network more secure, but also brings more challenges for miners, including increased competition and the need for additional resources for more powerful mining hardware and cooling systems, which means the competition only brings more security because you're competing to get the Bitcoins. You're competing. Miners have to compete more. And it also means more resources are going to be contributed towards securing the Bitcoin network, right? It's more valuable, it's more scarce. A higher hash rate is directly associated with a stronger, more secure network, creating strong barriers against anyone attempting to compromise integrity, which Bitcoin has never been hacked. It's the only supercomputer that has never been hacked. Bitcoin has never been hacked. Only exchanges and people get hacked, not the Bitcoin network. So just to throw this in to simplify this, basically, as the Bitcoin network grows, you need the hash rate to go up. It's sort of like a city or an economy. The more an economy grows, the more security you need. The more police officers, the more governments, or the more governance, the more police, right? The more military, whatever it is, the bigger a nation gets, the bigger any economic entity gets, the more security you need. So the hash rate going up, breaking all-time highs, and Bitcoin is, below its price. It's 50% down from its all-time high. Tells you that the Bitcoin network is still much more valuable than it was, even though the price is lower. So that's just a good little barometer there. What is behind it? Blah, blah, blah. Who cares? Either way, Bitcoin hash rate is going higher. Okay. So the security of the network is continuing to climb. That is good news. And if that hash rate were to fall, that would mean that there's not a whole lot of demand for Bitcoins, right? People are not believing in the actual structure is not, nobody's actually mining the Bitcoins, right? Or starting to slow. So we're not getting that. It is starting to actually speed up. So that's what we got there. Just a short little segment. Also, we had some news that there were some big inflows coming in. Big inflows. Is this it right here? No, this is the hash rate news. My bad. Inflows. I don't know where I put it. Anyways, there's supposed to be a lot of inflows into Bitcoin that we're hitting the market. Oh, we're about to get consumer expectations. We should have got this already. Consumer inflation expectations 3.8. This is really good news right here. Also, I need to find FedMeister, what they said, Meister and Daily. So consumer inflation expectations. This should have put a bid in the market. Did we bid higher? Usually this is good. This is really good news. So consumer inflation expectations are down 4.1, 3.8%. Consumers are expecting less inflation over the next, is this 1 year? This might be the 1 year outlook. Yeah. Yep. So the 1 year outlook inflation expectations are falling. We're at 3.8%. Man, after this next inflation report, it should continue lower. Internet-based survey, rotating panel, approximately 1,300 heads of households. Huh. Well, who knows if that's a real reflection of consumers, but either way, it's about how the market reacts to it because we're looking at the stock market. So Fed Daily, FedMeister are who we need to, see what they're saying. Are they saying, oh, we got Bostic at 9 a.m., which is in about 45 minutes also. Bostic is always pretty dovish, so maybe we get a bounce. He's always dovish. He's always dovish here. Market still supporting our technical levels also. All right, what else we got? See if we're missing anything. Comments. Can you take a look at SBSW? SBSW, yeah, for sure. How's the audio also? Any is the audio skipping at all? Got pretty good audio. Now, SBSW for a short, for a long term, what is this? Stillwater Limited. Well, when I look at SBSW, whatever this is, it's in pretty much a downtrend. Yeah, this is in a downtrend. Very weak versus the over. In these type of conditions where there's still a lot of uncertainty and we're not really getting clear liquidity picture, if a stock is downtrending in these conditions, then any risk can really throw this off. I don't know what type of company this is. I don't know how strong their balance sheet is or exactly what they do or their revenues, but from the looks of it, it could bounce. This would just not be a quality bounce play, but it could be bouncing. The RSI is at the lows. You would want to see some RSI divergence. So if anything, if you're looking to go long on this, I really don't know if you're trying to go long on this. I would want to see the RSI turning up and price still flat. So you get some bullish RSI divergence. Otherwise, scary play because I mean, I don't know the fundamentals, but I've never heard of this and it looks pretty crappy to me. So that's what I'd say on that front. Let me see. Where's it at in the simple moving averages? They're starting to turn over. Yeah, the 100 crossing below looks pretty bearish. Maybe there's a retracement. That's a tough trade, but you need some bullish divergence if you're going to get long on that. If you're short, wait till it actually pulls up, and then you want to get short right into that previous consolidation, which would be, what is this, $7 to $7.50? Maybe you get short into that. It looks like it'd be a better short setup if you're patient, but long, pretty sketchy. Wednesday is a good opportunity, maybe. For what? Big man coming? What up, big man coming? Can you do Coin and Mara? Yeah, we can do Coin and Mara. I know Coin is starting to turn up. It has that not head and shoulders, reverse head and shoulders or cup and handle. Let me get rid of this. So Coin, yeah, Coin is looking solid. We got 81 above 81. Let me see. What does the SMA starting to look like? Simple moving averages. Not a lot of data there for coin. Let me go to the daily chart. Okay, so the daily chart on coin that's a lot of tightness on those moving averages. So it looks like the 50 is starting to finally turn up. Yeah, coin is all about Bitcoin though at this point. We need Bitcoin to turn up. You're really looking for Bitcoin to turn up to get the real catalyst. If you really want to get follow through, Bitcoin needs to get above 32K. Just simple and concise. Bitcoin needs to get above 32K to see some real. Now, if you're talking intraday, bro, what are you guys talking, intraday or swing? If you're talking intraday, that's a totally different picture. Not sure intraday because I have to put this on another chart. See what coin looks like down here. Double bottoming, yeah, nothing there. But yeah, you really just need Bitcoin to jump. You need Bitcoin to jump and get out of this consolidation zone, right? We need Bitcoin above 32K. 32K, and that's going to be the signal for Mara or to look at Mara for Mara and for coin to catch that move to the upside. I would be a little more careful. I know a lot of people like Mara, and maybe I don't know enough about it. Possibly I don't. But when I look at Mara, I see a company that is front running the Bitcoin price, so it might be dangerous to get in before that confirmation, because if Bitcoin does pull back to 25K, this thing is going to get murdered. Oh, don't know if I can say that, but that's what I think. It's going to get murked. Got to use alternative words so I don't get banned on the TikTok algorithm or deep, YouTube, whatever. So yeah, Mara is pretty. I don't see nothing on Mara. No entry point here. It's vertical. Wait for this to break down and come back to maybe 1150, 12. I mean, I don't know. But this in the short term, Mara is running into resistance here. Is definitely running into some resistance. This is clear resistance, 19 to 17. 19 to about 17 or even 15. Yeah, a lot of resistance there on Mara. So maybe a pullback and a support of this previous consolidation would be good. That's what I'm seeing there. But really, it's Bitcoin at the end of the day. Mr. Daniel. Daniel, any more call outs? Long-term good. What do you think about Ustock? Ustock? See. Ustock. Unity Software. Oh, this is Cathie Wood stock, right? I mean, they should have a catalyst pretty soon as liquidity turns up. I don't know. Wall Street doesn't like this stock for sure. Was there any bullish divergence going on? Now, if I look at the moving averages, it looks like it's getting some bullish divergence here. We're starting to see the 50. We're starting to see a triple golden cross possibly. When Unity breaks up, it's probably going to break pretty hard. I think it definitely goes back to like 70 when it does break above what, 45, 50. But definitely some support there. It's sort of riding a trend. Look at this trend right here. It's starting to ride this trend. This also reminds me of the S&P trend and the QQQ trend. So yeah, Unity has some room. Let's see, what did price action look? Oh, this is fairly new. Unity Software. You could try to buy this uptrend. I mean, I don't know. I not a great setup for me, but if you're invested, that's totally different. Just keep in mind there is a golden cross, so the momentum is higher. I'd have to look at the fundamentals. This is not a mega cap. It's not getting pulled necessarily by the overall market. It's going to be more reliant on bond yields. So when bond yields actually drop, 10-year yields, if they do collapse, Unity probably goes higher, right? Because the cost of capital is very important for those companies that are not profitable yet and that are looking way into the future for earnings. But yeah, long term, yeah, I'm sure it's go. I mean, I'll just read Cathie Wood's research on Unity. She has a lot of research, a lot of reasons why she's long Unity, and I'll check that out. I'd say the only things that Cathie Wood does that are kind of sketchy, I don't want to say sketchy, but are hard to understand, are the genomics plays. Those are tough. Like you have to know you don't really understand the details of the genomic stuff or the the biotech stuff. That's hard to understand. That's really tough to really get, the biotech stuff. All right. Let's see what's going on. Let's get back into the market. When I say back into the market, I'm speaking of this chart right here. These charts. All right, here's what we got. Man, S&P came right back down. IWM starting to hold. Hey, IWM, nice setup on IWM though. I'm gonna put it out here on the right-hand side. Right into VWAP. I don't know if it can continue, but that's a pretty clear wedge. Looks sort of wedgy. I got to start doing that. I actually never drawn a wedge like that before. IWM with the support. Dow got right back in. Yeah, something hit the market hard though. Dow got right back below. Let's see if we got anything on the S&P that changed. Oh, it is the Fed speak. Okay, I'll go through this. I was waiting for this. Dang, MetaThreads hit 100 million users. Any of you guys got MetaThreads? I got Threads. I'm on the MetaThreads platform. All right, so Fed bars, let me see, where do I keep up? Which one do I keep up here? All right, so Fed's bar says extended enhanced capital standards. We already read that. Capital standards for banks, the 100 billion assets, blah, blah, blah. MetaThreads, Secretary Yellen tweets, I left Beijing after. So this is Janet Yellen tweeting. That's so hilarious. I wonder if she goes to MetaThreads and tweets too. I left Beijing after 2 days of constructive and frank conversation, clear, get to the point conversations with the Chinese officials, discussions with members of the U.S. community in China and engaging. So she just basically flagging, hey, we had a good discussion. Cool. So basically constructive, straight to the point. I believe we made progress. Hey, look, if this gets resolved, I don't know what it's going to look like. Market goes higher, right? Another upside. This is geopolitical risk right here, by the way, that we're witnessing. And the market is not selling off either. It's just trying to find support off this uncertainty from Janet Yellen. This is important. These are big macro headwinds or tailwinds, depending on which way the seesaw goes. I believe we've made progress in deepening communication between our countries while raising issues of concern. We also discussed ways to cooperate on global. Yo, what the heck was that? Lost my spot. We also discussed ways to cooperate on global challenges and the importance of avoiding miscommunication and our national security measures, probably because they speak different languages. I wonder who their translator. Imagine if the translators were giving them wrong information. I believe we made no, he probably speaks English. I believe we made progress deepening communication between our countries. Oh no, I already read that. Fed bar. Okay, here's Fed bar. I'm just gonna pull this up. I'm not gonna trust that little feature. So this is Fed bar. I believe we made progress in bro. This thing like glitching on me. Fed bar says inflation is far too high. We are quite attentive to bringing inflation down to target. We have made a lot of progress on inflation, and the recent moves on rates are part of a process to move in a careful way. I think we are close. Yeah, the good thing about rates going higher is the bond market is actually doing the Fed's job. It is tightening for the Fed, which is why I think there's a even though the market's pricing in another rate hike, I think there's a possibility they pause, especially if inflation comes in below expectations. They could certainly pause. Maybe I'm wrong, right? But the bond market tightening for the Fed is very important because that's what they want, the market dynamics to work how they should. All right, so that was Fed bar, basically saying that, hey, the economy is strong and we still need to get inflation lower. Like we haven't heard that before. Excuse me. All right, so Fed Daily says U.S. economic momentum continues to surprise. Same thing. There's more room. There's more we need to do to raise rates. We need to be data dependent to make policy. Same thing, just reiterating the same stuff, blah, blah, blah. Fed Daily, just looking for something that might be a surprise for the market. Fed Daily says the risks have become more balanced, so that's good. Today, with the labor market still strong, inflation high, risks of doing too little are outweighing risks of doing too much. It's appropriate to slow the pace of rate hikes. Okay. So two things there. If we don't hike, the risks are higher, is what they're saying now. Before, like 2 months ago, when they did pause, it was the risks of doing too much are higher than the risks of not doing enough. Now that's switched around. Now they're saying that, well, the economy is recovering, so the risk is actually that we don't do enough. But then she ends it with, it's appropriate to slow the pace of rate hikes. So it's like back and forth, dovish, bearish, dovish, hawkish, dovish. I think it just comes down to inflation at the end of the day. Fed Daily. The risk of doing too little on rates outweighs. Yeah, she already said that. San Francisco Fed Daily says there are no longer lags than we assume. There are longer lags than we assumed. Okay. It's too early to declare victory on getting demand in balance with supply. We may end up doing less or more than a couple rate hikes this year. They're giving nothing. Same stuff, just same stuff. And that's why we look to the bond market to see what's actually going on there. Same old story. Man, Tesla making new low of day. Oh, no, never mind. I didn't. I thought it did. All right. So that's what we're getting on that front. Now, that was some boring stuff. I thought that was going to be interesting. Nothing there. Let's jump over to CNBC and see what they're talking about. See if there was any conversations earlier that we missed. State of show me the market, what to watch in earnings. Oh, yeah, we do have earnings coming up. That's going to be big catalyst. Inflation and then earnings. I think earnings will come in pretty smooth also. CPI, what is this guy talking about? Threads versus Twitter. Anybody else using Threads? Deadly flooding. Where's this at? New York, Hudson Valley. Well, I don't live in New York. All right, SPY showing support. All right, let me get rid of this. I'm gonna get back to the market, SPY. And then also, what was, oh, my bad. What was the other story? Earnings playbook. Yellen's China trip. Did anything change there? The earnings playbook. What are they saying here? Okay, so here's the earnings coming up. I don't know if I care about this. I really care about mega cap tech because they're going to lead the index. By the way, the VIX selling off. Dow starting to break back above VWAP. IWM set to break out on this sort of wedge pattern. And that's important because the Dow and IWM are going to if they keep moving up, right? If they keep making higher lows and higher highs, then it kind of defeats the lack of, wow, those are some big buy signals on the Dow. What's going on with the Dow? Dow pushing up. It deflates the whole there's not market breadth thing, right? If we get IWM and Dow moving higher, I should probably switch these actually. I'm going to put Dow up here, advanced decline down here. There we go. There we go. And then this is 30-minute. Now let's go to the 5-minute. Let's go to the 5-minute chart. Let's see what we're looking at here. So S&P is moving there. Any what is the Qs doing? I looked at the Qs for a while. Qs still consolidating. And then yeah, we'll look at big tech. I still haven't looked at Apple, Amazon, Google, Facebook, Tesla, see what they're doing. But let's look at Thursday. So Thursday we have PepsiCo reporting earnings. Okay, Delta Airlines. We've got Pepsi and Delta Airlines. All right. Friday, JP Morgan. Here goes the banks. This is going to be big for Friday. Dang, that's a lot of good information. Wednesday, inflation. Thursday, inflation, PPI. Friday, earnings season kicks off with the big banks. Wells Fargo, JP Morgan, Citigroup. And I expect them to beat earnings because interest rates are high. So lending and demand is still there. So we'll see. That's going to be another catalyst there. The start of earnings season. Let's see, Friday pre-market. So JP Morgan is pre-market. Wells Fargo's pre-market. A lot of volatility. Maybe by the end of Friday, we see a breakout or a breakdown in the overall market index. Because right now we are not getting that. We are definitely not getting that. Okay. So that's good. We got earnings coming up. US-China relations ease or improve. That's what we definitely need. Bear of ring. What is this? Citi downgrades U.S. stocks, sees S&P pull back. Whoa, okay. Citigroup. Now that's interesting. Now that is interesting. Okay, we're definitely gonna read this while we keep this up here. Let's see really quick. Let me throw Meta up there. Our big tech. Let's see what we got. So Meta pulling back into PDC. See if we can support there. Meta, Amazon. Whoa, Amazon had a huge pullback. Wow. Actually, I want to see this trend, and then I'm gonna read this article. I just want to see kind of how big tech is moving. Pulls right back into the breakout. Maybe fills the gap there. Google. See what we got. Google doing, breaking down further. Google starting to roll over and fill the gap. So we probably muddle around lower in big tech until earnings come out. Nvidia making lower highs. Okay, starting to roll over. And Apple, big pullback on Apple from that 194 level. Maybe it comes back to all-time highs, down 3.5%. That's a big move for Apple also because it's at 3 trillion. So 3% would be what? Like, what is 3%? Like $90 billion? It's at a $90 billion pullback. That man, Apple pulls back more than other companies are worth, than most companies are worth. That's insane. So yeah, Apple's pulling back, broke that trend finally. Looks pretty bearish for tech, but again, the Dow is strong. So if we look at Visa, still moving up. I'm just looking at Dow companies, Visa, MasterCard. I don't know if MasterCard's in there, but I do know we got Walmart. Walmart's consolidating at the highs. Okay, Pepsi. Oh, Pepsi pulled back tremendously. 196 to about 185. I guess that's not that big of a move. What else do we have in the big Dow? UNH, United Health Group. Oh, whoa. Healthcare hasn't done nothing. Healthcare is down a lot. And that actually brings me to is it CVS? No, not CVS. CVS is getting crushed. That brings me to let me see, CMG. How's CMG doing? Still making new highs, trending up. Oh, it looks like crap though. Microsoft. I'm just jumping around here. A couple names. Microsoft. I like Microsoft. Little sell signal this morning. S&P stepping up. Who is forming the big wedge? Costco. There it is. Costco. Now this was a big wedge that's been forming on Costco for a while. And maybe it is starting to break out. It had a nice pullback, so maybe Costco sticks around, especially with the consumer so strong. Costco could be an interesting play. Not my type of play. I'm not interested at all. And then you have, I didn't even look at Meta. What is Meta doing? Just grinding higher, just straight up. Wow. Wow. All right. Let's see. What do we got on the comments? Palantir. Oh, good one. Yeah. I forgot to look at Palantir. Palantir has been consolidating for a while. They might be waiting for earnings. I think they're going to crush earnings again. They're going to crush earnings. So to take a little dive into the technicals for Palantir, looks like they're trying to break out here. A lot of support for Palantir. Man, I got this thing marked up. Let me pull up is it the quarterly? Dang, 14. Yeah, a lot of buyers at low 15s for Palantir. A lot of buyers down there. It is starting to break the trend over like what, 15, 16? And then I think it's part of the IWM index also. Okay. Snow. I know a lot of people like to look at Snow. Trimble Navigation, Max P. What is it? What is Trimble Navigation? Not sure. Trimble Navigation. I have no clue what that is. Is that a stock or is it a feature on? Sounds like an EV feature. Snow slowly climbing up. Man, that was a lot of strength in Palantir though. Today, nice capitulation to the upside. Was there some type of news or is it just squeezing? Might be just squeezing higher. Carvana. Hey, Carvana had a report. Oh my gosh, Carvana exploded. Carvana had a report talking about Tesla was the best-selling car. Yeah, Carvana is ripping up. Okay, Carvana. Remember when this was at what, 14 before it started squeezing? Stock. Max P. Well, Max P, yeah. What is the ticker though? I don't know what Trimble Navigation is. You're gonna have to throw me the ticker. Looks like a drop is imminent if nothing else turns. AMD turning around, but not much else. Yeah, not much else. Tesla, I think, is weakening, right? Tesla's still weakening. Consolidating down there. Okay. Max P. Yeah, let me know what that is. TRMB. Okay, TRMB. TRMB. Trimble. Oh, I see it. Big pullback. I mean, it has a long way to go to 96. Trimble. I don't know what this is, though. Never heard of it. I mean, it looks like it is breaking. It is starting to break the trend here. So this could have a lot of momentum, but I think it does need a catalyst in this high rate environment. Agriculture and construction. It looks like it wants to break out, though. It does look like it wants to break out. It looks like Zoom has a price action of Zoom earlier, but it does need to get above, what, 54? Really needs to start holding above 54. Gap to fill, got rejected 3 times at 53. Maybe the hold the 53 for Trimble. Okay. Hold the 53 for Trimble. Looks solid, but I don't know what that company actually is. It has me a little curious. I want to look it up. PRMB. Let's see what this is. $12 billion market cap. Okay. Science, technology, instruments. Forward P17. That's good. Earnings growth is projected to go higher. Leverage to debt ratio is pretty good. Nice fundamentals. Gross margins 58% versus the peers. I don't really know what that means because I don't know what their peers are. Revenue's okay. They just got upgraded by Edwards Jones in April. Total revenue, income, net income is positive. hey, I don't know. Maybe they do. So what do they do here? Enable professional and fields mobile, enhance, transform the work and process world. Okay, so they're data. Very complicated. Construction equipment software for 3D design and data sharing. Okay, I don't know. That's out of my wheelhouse. Don't understand that. I'd have to do some research on it. But technically, it looks pretty solid. The income's bad. The balance sheet doesn't. I mean, the income statement is not terrible. The forward PE is down. It looks solid. It looks solid. Maybe I would be if this is a scientific technical instruments company. Who are their competition? I always like to. You always learn something new, and I want to know who are they competing with. Do I know any other companies that they're competing with? Key Insights Technologies. Oh, yeah, that's a big. Okay, so they're number 5 here in scientific instruments. I don't really know these guys. Yeah, I don't know what these companies are. Very technologically based. Could go a lot higher. I don't even know what the index is that it follows. Let me see what the index is, because if you are trying to go long on this, you want to know what is the index that it follows. It looks like it follows. Looks like it is following the what? Schwab small cap ETF. Maybe IWM. I think it looks like it'd be in IWM. Beta Builders. S&P 400 mid cap ETF. Maybe IWM. So if IWM continues to break out, this thing probably breaks out. But that's a good setup there. I like that technical setup. It looks solid. TRMB. Pretty solid there. Pretty solid there. Like that. All right. So to this article, right, as we're watching the overall market, see where the dollar's at. Dollar's about to drop 102. This is so bullish, especially for crypto. If the dollar drops, it's going to set crypto off regardless of the ETF getting passed. DXY dropping out there. Earning season's coming up. A lot of catalysts. Today and tomorrow are kind of like, okay, let's prepare for what we're going to see so we know how to react. Because really the big data comes in on Wednesday. All right, so I'm going to read this this report. Citi downgrades U.S. Let me get some water here. Citi downgrades U.S. stock, sees S&P 500 pull back 9% to 4,000. All right, that's possible. That is very possible. Oh. Hey, just if you guys are just joining so you can see the market here, just so you know, at the top here I have the Qs. Let me take this back to the 3-minute chart. Probably don't care, but basically I'm keep in mind the overall market. So you got the Qs up here, IWM small caps here. Okay, you have the Dow here, a lot of resistance on the Dow. You have advanced decline, market breadth here, and you have the VIX at the bottom. A lot of consolidation, no clarity yet. Market's probably going to make a bigger move second half of the day. Or maybe not. Maybe it doesn't. All right. So, see if I can read this without stuttering. Strategist at Citi downgrades U.S. equities after strong first half of 2023, saying economic slowdown will weigh on company earnings. We've heard that before from Morgan Stanley's Mike Wilson. He believes earnings are going to get destroyed. Maybe he's right. The Wall Street firm slashed ratings on neutral from overweight on Monday and said the S&P 500 will pull back 9% to the end of the year to 4,000. The equity benchmark closed Friday. Oh, okay, who cares? After a solid 1-hour U.S. performance may go on pause, Citi strategist said in a note, our U.S. strategy team thinks mega cap growth is set for a pullback while U.S. recession risks could still bite. How? When is it set for? What is this guy talking about? U.S. recession risk. Did you not see the housing labor market numbers? Did you not see GDP beat expectations at 2%? The heck's this guy smoking, right? If you're talking about second half, well, we got a long way to go. So why would we get a pullback in the next couple of weeks? You better be focused on inflation. Inflation is the macro data to focus on, not recession risks. Those recession risks are disappearing, right? The market ended its first half of the year with the bang. S&P 500 popped 15.9% for its best half. Yeah, we know that. NASDAQ, blah, blah, blah. Citi said the run up in artificial intelligence related stocks could be overdone. Hey, maybe they're right. I don't think so. Especially with earnings season coming up, you're going to really hear how AI is now integrating inside of these mega cap / small cap companies and how they're using AI to 10x productivity at a tenth of a cost. Meanwhile, the other headwinds could put pressure on the market, including a potential recession, waning inflows into equities. Inflows exploded in June, by the way. There was a record inflows from retail. A lot of cash on the sideline. We talked about this on Saturday in the macro report. Inflows are still suppressed. Don't get me wrong, but they are starting to pick up. So better than expected inflation data that comes out on Wednesday is going to cause those is really, I think, going to spark more inflows into the market. So they're bearish. Maybe they know something we don't. That's why we're reading the report. Growth may be set for a pullback as AI euphoria enters a digestive phase. And I think really what they're saying here is that this big move has all been AI. There's no real true fundamentals. Okay. Recession risks remain elevated. Volatility tends to rise after a sharp fall in market breadth. Volatility is still suppressed, by the way. It's still falling. NASDAQ volatility. The only volatility that really took a meaningful uptick was bond volatility. Okay, we got to watch out for that because that's lending. The more bond volatility goes up, the higher the lenders set their rates for borrowers, which are all S&P 500 companies, which are all equities, all companies in general. So we got to watch out for bond volatility. That might actually be more important than the VIX. Global inflows boosted the Japanese equities and should peak soon. So they're calling a peak. I don't know if Japanese stocks peak. The Nikkei is up from a 30-year high, right? 30 years of consolidation breakout, bro, you're going to the moon. So Japanese Nikkei up because they're stimulating. China's stimulating. Citi forecast 4,000 is below the average year-end forecast of 42. Now everybody's forecast is at 42. Remember like 2 months ago, everybody's forecast was 38, 3,500. Now they're all upping their price targets. We told you this would happen. Not because we can see the future, but just because the macro variables are starting to improve. And man, they're starting to improve. There's a whole bunch of them. Go check out the newsletter, by the way. If you haven't subscribed to the newsletter, check it out. Check out the newsletter. Got all the info in there. We're on, Saturday. Every Saturday I come out with the newsletter and I even come on live and talk about it. And I'm taking info from a lot of different places here. All right, so that's it. They're just saying, growth falls because they think the AI. So what I got out of this is Citi believes the AI hype is over. And so it's going to put more pressure on the market to the downside in big tech. And market breadth continues to fall. Global inflows are going to roll over. That's wow. There must be more to that because that wasn't very convincing. That was not very convincing there. Well, we'll see how I think the AI hype picks up during earnings because we're going to see exactly how the companies are using AI to some degree. And like I say, maybe I'm wrong. That's just my guess. I think they're going to talk about AI even more. GOP president candidate Ramsey offers 10% commission to fundraisers. Blah, blah, blah. Morgan Stanley upgrades this. Don't care. So that was the macro report there. All right, now let's see if any of these guys are talking. I want to definitely, is tech overbought? Oh, Dan Niles. Is that this guy named Dan Niles? Is tech overbought? That's what everybody's wondering. Is tech overbought? What to expect in second half of 2023? Mosaic. All right, yeah, this looks like a good segment here. All right, yeah, is tech overbought is the question. We're going to go over that. What do you guys think? Is tech overbought? Let me know in the comments. Do they even know what AI is? Last week, the first group of humanoid robots held a news conference. This is Football Legends, ASAN conference in the United Nations. AI has not even started to show its true capabilities. Dang, I need a better stream deck. 100% ASAN, 100%. It's like when AI comes out.
Bye. Order filled. Order filled.
Is tech going lower? Because is the AI hype over?
Nope.
No, I don't think so. I think it's just getting started. I agree with you 100%. Oh my God, it's all hype. Well, you don't understand AI then if you think it's all hype. That's what they said about the internet in 91. The internet is all hype. And then for 4 or 5 years, the NASDAQ went higher. And everybody talks about the NASDAQ rollover. But it's like, hey, if you were in at the lows coming out of the bear market from 91 to 92 to 93, Well, you were still, above water after the pullback. Either way, this is not 2001, man. We don't even have to go over all that. We're not going to go over that. S&P holding on here. All right, let's hear what Dan Niles has to say. Let's check out what this guy has to say and give some market commentary on this dude. Any comments on here? Is AI all hype? Is the NASDAQ done? I don't think so. There we go. All right, let's hear what this dude says.
Dan Niles, founder as well. Dan, it's always good to hear from you. Thanks for joining us.
My pleasure.
So were you surprised by the first half outperformance in tech and the overall market before we get into the outlook?
Absolutely. I thought so if you go back to what we were saying, when you had all the bank failures, our view is the market would rally just because the government would step in. And we've seen this since the global financial crisis. Of every time there's a problem, you get tons of stimulus, and you got about a $400 billion expansion in the Fed balance sheet right when you had all those bank failures. So we thought the market would get up to about 4,200. But one big thing happened was May 24th, NVIDIA reported guided revenues 50% above consensus for the next quarter. I've been doing this for 30 years. I've never seen that kind of revision up in a big cap company. And so at that point, you had a 7% rally in the S&P. NVIDIA was up over 35% since May 24th. And, the market's gone to 4,400, which is well above the 4,200 that we thought it would peak out at. And so, yeah, it's definitely been surprising. But, to some extent with NVIDIA and what happened, it makes sense because, people love stories. They want to chase, the next greatest thing. And so in that regard, I guess it makes sense.
Well, it was NVIDIA, but it wasn't just NVIDIA. If you look at June's rally, it definitely broadened out on this idea, Dan, that growth is not going away. We've still got it, and inflation is moderating. And that's a good sort of recipe for stocks and earnings expectations.
Well, yes and no, because remember, NVIDIA's numbers went up a lot, but we're going to have to see how everybody else looks that reports. So since then, you've had companies off quarter like Accenture, supposed to benefit from companies consulting over AI. The numbers went down. Micron, you need high bandwidth memory. They reported Ford numbers went down, stock went down. Cynix, same thing. So you got to remember, NVIDIA is in a special class because they basically have a monopoly right now on how to enable AI. And investors think, well, all these tech companies are going to benefit. Well, the money spent on NVIDIA is coming out of some other budgets. It's not like the economy is going gangbusters and companies have tons of money to spend everywhere. It is the year of efficiency, to quote Mark Zuckerberg.
Well, first of all, okay, just to put it out there, yeah, it's coming out of other budgets, but when you're incentivized by the Inflation Chips Act to do this, it does make sense, right? It's not just if you're spending money, oh my God, your growth is going to slow. Like literally, the government is incentivizing chip makers, incentivizing the building of technology. And they'll continue to do that because why do you think Janet Yellen's in China? We are in a war. Like I said before, we're in a war for technology, for advanced technology, and the fiscal policies, the government will keep spending to make sure that we are the global, that we keep global dominance. And we need that in technology. So there's going to be more spend in technology over time. So yes, it comes out of somebody's budget. We are in the year of efficiency, 100%, but don't discount the monopolies, right? The monopolies are going to be monopolies and they're going to keep bidding higher because the expectation for the future is what is being counted in, not right now. You spent money. Like, I don't know. We'll see. But smart guy, is tech overbought is the question.
For a reason. And you're hearing that from every company. So this earnings season is going to be very interesting because I think you're going to see some companies do well off the AI theme. But I think you're going to see others go, yeah, our AI business, just like Accenture, just like Micron, just like Cynix, that part of the business is doing great, but all this other parts of the business is slowing down. And so our forward numbers are coming down. And I think that's why this earnings season, you're going to see a lot of stocks getting hit pretty hard off of it, and others confirming that they are actually doing well off the AI theme.
So you don't think, I mean...
Okay, I agree with them there. Yeah, some companies are trash. They just used AI and nothing's going to work. And so that capital is going to flow into the ones that are actually doing well off AI. I think Palantir, one of the best plays you can get off that. Tesla also. But more people understand the Tesla story. They don't understand the Palantir story. It's very misunderstood by Wall Street. So, anyways, yeah, I agree with them. Some companies do okay, some don't.
with consensus down 9 year on year, I mean, Goldman's take is that would be trough earnings. You're not in that camp?
No, I'm not in that camp. I mean, I think, the economy is like a battleship. We've had 10 raises so far. I think we're going to have another raise at the end of this month by the Fed, and then one after that, at least at a minimum. And so it takes a while for that to.
All right, so here's Dan Niles' outlook. Recession near year end. Okay, calling for recession. Yield curve inverted, but the Fed steps in my view. Market will be down in second half of 2023. So yeah, July to December. August to December. Poor risk reward in near term. Okay, more pressure on low end consumers. Probably true. There is more pressure on low end consumers, but that doesn't change the stock market's trajectory if AI is still pumping the best stocks that pull the most revenue and inflation continues to fall, causing more people discount sentiment. If nobody cares if the consumer slows down a bit, if all that cash on the sideline, all the trillions of dollars. Matter of fact, Ed Yardeni came out with a piece that showed how baby boomers have $75 trillion of wealth, right? And they're going to keep spending into the economy as they retire. And either way, all that cash on the sideline, when it gets poured into the S&P as inflation risks de-escalate, as China geopolitical risks de-escalate, boom, there goes the stock market back up. So true, there is pressure, but we're not at all-time highs. When so much cash is on the sideline, that really determines price, not, oh my God, did spending drop a little bit? It's really what the real question is, what surprises to the upside while everybody's negative and causes that cash to come back into the market? What is it? I think it's inflation, right? I think it's going to be inflation. I think inflation expectations falling. I'm going to keep saying it over and over and over and over until crude oil breaks out and more risks come on the table and geopolitical risks fall. Then that cash is going to keep FOMOing back in, wave 2 FOMO. So we'll see. But fair assessment, right? You can't just be super bullish. You have a lot of clients. So this is Dan Niles. And Asan, I'm going to read you. It's not even, do they even know AI is blah, 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 true capable? Hell no, it's not even been started. Chat GPT is one and only one example released to the public. Yeah, that's just one example. Look at track records of Dan. He's been most of the time in the wrong side. Okay. I swear that God, if you ask him describe AI in technical words and details, he can't come up with a sentence. Fair enough. Fair enough. Maybe he doesn't.
Filter through the economy. And don't forget, those bank failures just happened in March. And so lending standards have tightened, but it's going to take some time for that to work its way through. So the bank earnings coming up later this week, actually, I'm going to be watching, very closely, because unlike the rest of the market, the banks are trading about 30% below what their historical, average is. And we all know numbers are going to come down, right? Net interest margins are going to get compressed. Loans are going to be harder to get. And investment banking fees obviously down. So estimates are going to go down. If the stocks go down, despite them being at a 30% discount to what they normally trade at, that's going to tell you something about the rest of earnings season and how high or low expectations actually are.
Yeah.
And so I think with the tech companies that have been on a tear ever since NVIDIA reported, there's going to be some interesting puts and takes here in terms of, well, AI is helping this, but maybe the economy is hurting that. And if you've got a very high PE ratio, that could be a severe problem. I mean, we like Meta. That's our best pick. It was one of our top 5 picks coming into the year, because you've got high single-digit revenue growth. You've got a 23, 24 PE against the market at 20 times. That's really interesting. You compare that against an Apple growing revenues at 1 to 2% at a 33 PE, that's a lot more challenging. And so I think valuations.
So how funny is that, right? Guy comes on, tech's gonna have a pullback, sure, okay, but he's still long Meta. So that tells you that he's just being a little cautious. There goes Tesla making new low of day. Tesla selling off. I think it comes and fills that gap at 260. By the way, I'm always keeping my eye on Tesla. What is that? 260? Yeah, the 260 gap. So he's long Meta. So he's long big tech either way. And if Meta had an AI chatbot, which they are actually coming up with, then maybe he wouldn't be saying this. about AI not being such a big. Now, I do agree that some of the banks are going to fall. We're actually keeping our eye on KRE as the banks report, because if the banks roll over, and he's, oh dang, S&P sharp downside move. If the banks do roll over, then that's going to signal to the Fed, hey, do you guys got to do more BTFP, more bank term funding program, right? VIX shooting up to high of day, by the way, too. Maybe something came into the market. I'll check that out.
The piece that nobody's really focused on. And I think at these levels, especially with the three-month T-bill at 5.4%, guaranteed, risk-free, against the market, where if you take the inverse of, you know, where the S&P is trading at, which is just over 20 times, that's less than 5%. The T-bill looks pretty interesting, especially if rates are going to go up even more from here.
Dan, thanks for coming on, summarizing your second half views. Appreciate it. Always good to hear from you. Dan Niles.
Thank you.
Okay, so T-bills, Meta and T-bills, not bad, not a bad strategy. Get the T-bills. They're you know, they're pumping a lot of they're giving a lot of interest, more than the money market funds actually. The risks of the AI hype cycle. Huh. 1 billion into AI. Just trying to see if there's anything. 6 trillion, what was that about? Survey, disrupting investment, predictions, asset manager transaction. Okay. Oh, here comes the guys. U.S. outperformance takes a pause. We downgrade U.S. to neutral. Oh, that was was this the Citigroup? Possibly the Citigroup news?
All of the things.
I don't know. Anyways, yeah, these guys are talking now. So yeah, earnings season is going to make a big difference here. We are headed into earnings season. We're going to see what actually holds up. S&P is making new low of day, by the way. Fed Daily says we're at the end or the last part of the rate hiking cycle, positive. Fed Daily says community banks are tightening more than big and regional banks. Wow, but hard to know how much. She also said that a shock could come, a credit shock could have lag effects. We still haven't seen them. Credit tightening from March, banking stress is probably less than a quarter point to 50 basis point rate hikes I have thought of. Fedmeister says had favored June. Huh? Oh, she had favored the hike in June. Okay. Saying a bunch of stuff. I think it's all, we just got to watch the macro data. Tesla getting slammed. Yeah, Tesla getting smacked. Looks like it's coming back to fill 260. 261. Tesla with the fill at 261. Coming back to fill 261. Man, that was a big, big move. That's maybe the biggest move we've seen to the downside for a while. 3.5% headed into earnings. Still in the uptrend. I think the uptrend's around I think it'll fill the gap and then turn around. So 261, 261.79, 261.80 is that gap fill for Tesla. If it drops below that, wow, whoa, maybe some other risks are coming in. We'll see if the buyers can hold that up. We'll see if the buyers can hold that up as rates higher. Reassessing the rally. Everybody's reassessing the rally.
The more important earnings seasons for tech companies, because as we're in this early side of NVIDIA, those opportunities.
The next Barclays doesn't necessarily,
like we saw in showing
these names. You get a little.
All right, I'm going to pause that there. Let's see what's actually going on. If anything is changing in these. All right, here we go. All right, so what is changing here? What do we got? The dollar still selling off, positive. Positive for the dollar selling off. Bond yields, are they coming back down? Well, I mean, they might keep going higher. 5-year, 2-year bonds coming higher, are coming down. Bond market, everybody's long bonds. This is the actual signal for the bonds. Bonds are at risk of slipping here. Bonds are definitely at risk of slipping here. So the bond market is usually correct. And the bond market, you know how people keep saying growth is going to slow, credit risk. we'd be seeing the bond market bid up, right? We'd be seeing this go up. So I think the bond market is, you got to keep your eye on the bond market, and it's saying that growth is slower and that the risks for the economy slipping are slowly falling apart. And so it just comes down to inflation as always. As always, it comes down to inflation. Crude oil hopefully gets resisted there. We need crude oil to stay below that level. We do not want crude oil going up. MicroStrategy, dang, MicroStrategy still moving up. Goodness. 10-year, 2-year, who cares? Oh yeah, TSM, that was the other play. TSM semiconductor. Making higher lows. Adobe still strong. Oracle coming back to that gap fill. Square, a lot of people discount Square, but Square is going to be part of that because of Cash App, part of that Bitcoin rise. They hold a lot of Bitcoin. Open Door back at 4. Nothing special. All right, anything on Twitter? Anything on Twitter? No. Let's see, double check here. Bank of America, every single time this happened, the last 40 years, a crisis hit markets. Bank of America research. Okay, this is I knew it. I am not a paid subscriber, so I'm not reading that. Nine Fed speakers speaking. Yeah, a bunch of wishy-washy this week. Too many Fed speakers. Too many Fed speakers. I don't like that. A lot of Fed speakers this week. Ooh, man, Tesla. Nice setup for Tesla. If you're short, congratulations. Nice setup, short Tesla. Tesla definitely getting slammed. All right, I'm going to go back to this lady on the Squawk Box. Hear what she has to say.
And this is a binary week, right? I mean, you've got, forget about the Fed talk. You've got inflation numbers, and if inflation numbers show a real decline, then the market's going to take off. If the numbers, on the other hand, show like we saw in,
I actually do agree with that. I actually agree with this guy for the first time. Market's going to take off if the inflation numbers are good. So we're looking for 3%. We're looking for something to really get bullish. If we're at 3.2, the market's expecting that. But if we get below that, if we get to 3 flat or 2.9, market's going to take off. Period. That is the next strongest catalyst. There's not really nothing to say there, and other than earnings. So that's what we need to focus on there.
and I think it was in Europe today, show an uptick, then you've got an issue with the market. So that's really, so it's binary based on them. What you're seeing today is really nervousness in that very leadership group that you're talking about.
The question is, Bryn, as to whether, if tech falters, is something going to be there to pick up the slack? Barclays doesn't necessarily think so. They don't believe that broadening is going to happen to the rest of the market. The other idea that Bank of America puts forth today on the issue of rising yields, since 1980, they say peaks in U.S. 2-year yields have always been followed by a risk-off event within the next year or so. The full extent of damage is unknown until the peak in policy tightening is behind us. We are clearly not at that point yet. How do you see this?
Well, I mean, I think first of all that you can clearly have other sectors lead when tech is faltering. We saw that last year. If you actually didn't own tech, you did quite well. And so you can always have those opportunities where other sectors carry the weight. Last year is a good example of that. I think right now it's about digestion, and that, yes, we've had massive multiple expansion. And outside of NVIDIA, I'm really hard pressed to see which companies in the tech side are really raising guidance. Sure, Facebook is cutting expenses, but who's actually raising guidance outside of NVIDIA? So I do think this will be one of the more important earnings seasons for tech companies, because as we're in this early AI stage of where we're building out the AI, this AI, whether it's sustainable or not, which companies are marketing AI and which are monetizing AI? And clearly, NVIDIA is monetizing it. We'll see who else is. I also think that the CPI print is probably going to be weaker than people are expecting, because just in the fact that the June of 2022 number is going to drop off. And so after this report, this is going to be the last report where you have this big one handle from last year. The June of 2022, Scott, was 1.2%. And so over the next 2 months, inflation, as measured by CPI, is going to be continuing to come down into the low threes, which ultimately is another sign for the bulls that yields probably have peaked, regardless of what the Fed's done. So I just think we're going to continue to have a small summer rally, because I don't think that.
Oh, I like that. I do like that small summer rally. I agree. So like she said, base effects of last June were so low that we should see lower inflation over the next. I think we're going to be in the twos. She said low threes. I think we see the twos. I think we see the twos, market rallies, period. After that, we do have, okay, so we have the earnings, Citigroup. Friday is going to be important too. And then PPI also important. So just keep this in mind. I'm going to keep nailing it in. I think that inflation report, this might be the best inflation report we actually get, because oil's been, flirting around 70, 60. And it's not that oil needs to go lower for CPI to go lower. Oil just needs to go sideways at the low level. And what you got to understand is that inflation is a reading of rate of change. So if oil stays where it is, let's say it was 70 last month, it's 70 this month, the rate of change is 0. It didn't go up. So that 0 is going to factor in the CPI, which means energy is coming down. I think it's going to, we might see the twos. If not this month, next month, we're going to see the twos for sure. So I'm calling it out. If I'm wrong, slam me, talk smack to me in the next report. But I think that's what we're going to see. I think we're going to see the twos definitely come into play. And market's going to bid up. Bond yields may have peaked because of that. I think bond yields are bidding up in front of that inflation report because the labor market report was so strong. But that doesn't mean inflation goes up.
Yields probably have peaked, regardless of what the Fed's done. So I just think we're going to continue to have a small summer rally, because I don't think that the economic data is strong enough to push yields that much higher.
So, Joe, Bryn makes an interesting point, this idea that other sectors can lead. They did last year. Yeah, that's great when energy is crushing it and healthcare is crushing it. Mm-hmm. But what's crushing it now beyond tech? What looks like it wants to crush it beyond tech? You're closer to a potential recession now than you were a year ago. The alarm bells of that maybe aren't, flashing still, but maybe they will. Without, absent one of these other sectors starting to pick up, you need tech.
Well, first of all, Europe is in a statistical recession, 2 consecutive quarters of negative growth. China's declining. If you want to understand why energy is underperforming in a year in which OPEC is reducing supply, it's because Chinese economic growth and the reopening has been muted. So you're studying other sectors. You could look towards industrials and say year to date, yes, they're strong. I don't think that's going to be strong enough to maintain momentum in the market if technology falls to the side and industrials can't be expected to have the leadership. So I look overall, and back to Steve's point regarding price, I think what we're seeing is that momentum in this quarter is going to plateau. Momentum's going to plateau. I don't think it's going to peak. And I don't think that's going to change the narrative of 2023, because this isn't 2022. The fundamental catalyst in 2023 has been technology. And no, I don't expect other sectors, if technology plateaus, to step forward and do enough attribution to advance the S&P.
Okay, we know all this. We know that nothing new. I mean, communication services falls to session lows. I think we've covered everything for today. I think we've covered pretty much everything for today. At least for this morning. It's about we've been in what have we been, 2.5 hours in? Yeah, almost 2.5 hours. So we've covered a lot. Any questions? Let's do some Q&A before we take off here. Any questions? I'm gonna see if I could find anything else out here. Any questions here? If I had my search. Anything new that we're forgetting before tomorrow? Breaking news, markets. ECB Nagel European plate remains too high. Yeah, we know that. No questions? Tomorrow, we have the NFIB Business Optimism Index, which is pretty much, where's business at? I think it's going to be muted. It'll probably be flat. We do have Bostic speaking, though. So where's the Bostic? I wanted to see what Bostic had to say. I don't see anything yet coming up for Bostic, but we could see the market. He's usually dovish. I think we bounce on the market a little bit. He's usually pretty dovish. Let's see. Consumer credit change. We're going to find out the consumer's credit tomorrow. Looks like it's coming back down. Outstanding credit flows, extended individual households. Okay, outstanding another personal expenditure, including loans secured by real estate. Consumer credit, outstanding credit flows are also coming down. I don't know how important that actually is, but we're going to see that tomorrow. Bullard, he's usually pretty hawkish. 6 a.m. or 9 a.m. right before the market opens. We're going to get Bullard's comments. Anything else? Oh, China. We get a lot of good data tomorrow for China, but this won't be till the end of the day, so we won't see this till Wednesday. China, and I'm excited about this because I want to see is China slowing down. China new loans are falling. Okay. And I want to see if they start picking back up. So new loans, outstanding loan growth has been pulling back on the last month. M2, does it go up? Right? April, May, does June. So what does China M2 look like? I think they're going to start stimulating pretty soon. Excuse me. They already have been stimulating, but I want to see what China does. Also, Japanese PPI. Whoa. Yeah, we're going to see Japanese PPI. They can keep printing if that continues lower. And I think that hits pretty much everything for China. So just to wrap it up for today, China. So what we're looking out for is Janet Yellen, right? Janet Yellen and the Chinese premier ministers. Do we get any type of reconciliation, any kind of deal? We don't want geopolitical tensions to go up. So that's one thing, China relations. Number two, right? The Fed's new indicators. We're going to keep track of that. We'll just add in 30-year mortgage rates. But either way, doesn't mean much. We're tracking it. Who knows? It doesn't give us no actual signal. It just tells us where we're at with financial conditions. Fed comments, same as always. Dovish, hawkish, a mix of both, data dependent. It all comes down to inflation that we're going to see on Wednesday and Thursday. All right. Anything else? Bitcoin inflows, it's the same thing. Nothing too big. Like I said, Wednesday is going to be the biggest day. So we got to prepare for Wednesday, the inflation report. And I'll obviously be live for that. If anything changes, then I'll cover it in the morning, right? Because we still have a second half of the day. We're still in the first half of the day. So if anything changes, we'll do that. Remember, Tesla has that gap to fill down at 261.79 cents. Could be filling that gap. All right. Don't forget to sign up for the newsletter. Link in the bio. If not, I appreciate you guys today. Have a blessed day. And I will catch you tomorrow morning, 10 a.m. Eastern time. Right? 10 a.m. Eastern time. So stay blessed. Hopefully I didn't forget anything. I think we covered it all. Catch you guys tomorrow morning. All right. Have a good day. Make sure you guys get your exercise. Eat healthy. Stay disciplined.